How do you calculate borrowing power? Most people will take out a loan at some point in their lives, either for a home, a car, a business, or for personal expenses. And more borrowing power means more options. But how do you know how much you can borrow? Borrowing power is something lenders and creditors calculate when assessing applications. And knowing what increases or decreases your borrowing power, it can help you put your best financial foot forward. So here's what you need to know. What is borrowing power? Borrowing power, sometimes known as borrower power, is the term used to describe how much you can borrow based on your financial situation. The more borrowing power you have, the higher credit limit or loan amount you can get. Your borrowing power is based on several factors. Generally, a person has more borrowing power if they have a strong credit history, a healthy deposit, either in cash or in equity from property, and a low debt to income ratio. Other factors such as interest rates and loan terms, they can also impact your borrowing power. Good credit and high borrowing power, they often go hand in hand, but it's important to get credit to build credit. Now, young adults, they often start building their credit when they take on the responsibility of their mobile phone bills or they start paying for their own utilities. But paying on time, in full, regularly helps to establish good credit. It may seem counterintuitive, but having no debt can actually decrease your borrowing power. Lenders like to have a reference point to assess their risk level, and it can be helpful to see that you've had financial obligations before and that you've met them on time. While you may decide to take on some debt to evidence a solid financial track record, it's important not to take on more than you can afford. While some lenders offer loans to borrowers with a history of credit issues, it may reduce your borrowing power. How do you calculate borrowing power? Different lenders have their own formulas for calculating your borrowing power, and there are many useful online calculators which can provide an estimate of how much you might be able to borrow. However, there are some other factors to consider. Many people make a substantial portion of their income from bonuses, commissions, or seasonal work, but not all lenders will factor that into your total income for borrowing power purposes. Some lenders will only use the income that's listed on your regular pay slips. So if you're self-employed, seasonally employed, or you're paid in cash, it's really important to find a lender who offers flexible assessments and is willing to take that extra time to verify your income. Other factors besides your credit history or hard financial numbers can impact your borrowing power as well. Your lender may look at things like the number of dependents you have or the length of time you've been in your job and any resale risks associated with the type of purchase that you want to make. General market conditions also impact borrowing power, and borrowers have more power when interest rates are low and borrowing rules are more liberal. For a more in-depth estimate, a mortgage or finance broker who is familiar with the policies of many different lenders can really help here. Does equity increase borrowing power? If you have equity in your home or investments, it may be possible to harness it in place of a cash deposit to increase your borrowing power. Equity can increase borrowing power when it is put towards the deposit on a new purchase. For home ownership purposes, equity is the figure between the current market value of your property and what you still owe on your mortgage. Now, equity can be leveraged to access borrowing power without actually selling the property. Many people take out loans against their home equity using the underlying property as security or collateral. The proceeds from a home equity loan can go towards whatever you need the money for. Now, some people take out a home equity loan to make improvements or repairs to the property. This can actually increase the home's market value, which can help to restore some of the equity that was accessed. What percent of the property value can you borrow? The percent of the property value that you can borrow, it's going to depend on a number of factors. If your credit and income are strong and you're not overextended financially, you may be able to borrow up to 95% of the property purchase price. However, it's important to note, different lenders, they will have different criteria for what is an acceptable percentage based on loan purpose, based on the property type, and also the location. A trusted mortgage broker can advise you on the percent of a property value you can borrow and which lenders are best equipped to help facilitate this process. How can I increase my borrowing power? You can increase your borrowing power by paying all your bills on time, lowering the limit on your credit cards, increasing your income or reducing your monthly expenses. Also, getting a loan with a longer term, saving for a larger deposit, keeping your credit history in good shape, showing consistency of employment or income levels, and consolidating debt into one easy to manage repayment. Does your deposit amount affect your borrowing power? When you're talking about a home loan, the amount of your deposit can impact your borrowing power. Now, all other things being equal, the higher your deposit, the more borrowing power you have. Some lenders may want to see somewhere between a 10 to 20% deposit for a 30-year mortgage with a low interest rate. However, there are lenders that offer home loans requiring as little as a 5% deposit. Now, this may mean a slightly higher interest rate, but it could help you get into your new home sooner. Do I need a loan broker? If you're looking to get a home, car, or business loan, it's usually best to consult a broker first. They can compare lots of different lenders for you, so you don't have to do it on your own and potentially miss out on a better deal. They can also help calculate your current borrowing power and give you tips on what you can do to help maximise how much a lender will approve you for. If you have a low deposit, unusual income sources, credit history issues, or are simply wanting to refinance your home equity, then getting in touch with a trusted broker, it's a great first step. Have questions? Visit liberty.com.au. Thank you for watching.